The United States added 175,000 jobs in May, and that's got stocks flying and gold sinking. Here to discuss the reaction to the jobs report is Axel Merk. Axel, tell me what you think is happening out there. Gold is really getting shellacked.
Well, I think today's job report had something for everybody. This year has been very technically driven. Hedge funds have been whacked around using lots of leverage, trades being undone and so forth. And so some people are taking some profit because of the recent rise in gold. I think this tells very little about the underlying fundamentals. The Federal Reserve is not going to have an exit. Inflation expectations are coming down, and the job report, while not bad, is not dramatically good either. And so the folks who didn't like gold before won't like it now, and the folks who loved gold before were still going to love it.
Hedge funds are also watching the yen. The yen has been strengthening, now at 97 versus the dollar. Now, is this just a breather on the way back up over 100, or is Abenomics failing?
Well, our price target for the yen is infinity, meaning it's going to be worthless, mostly because the dynamics are changing, because they're slipping into a current account deficit where actually a deficit matters. Now, in the short term, the yen, of course, has depreciated a great deal. People piled in with a lot of leverage, and sure enough, some stops were triggered, and there was a very violent unwinding of that, and that's why the yen surged back. Expect that volatility be more the new normal. We're going to have a lot of volatility in a lot of asset classes as people are getting used to these very, very extreme and exotic measures taken around the world.
So if you're short the yen, you can breathe easy despite this recent bit of strengthening?
We added to our shorts, but be sure, of course, that you can stomach the volatility, because that's going to stick around for some time.
Meanwhile, we had a little bit of a bounce in the euro this week. It seems like it's been all quiet on the European front. Nothing from Greece, nothing from Spain, nothing from Italy. Should we expect that to continue through the summer?
Well, what's happened is that everybody talked about the Fed tapering, everything being great in the U.S., everything being horrible in Europe. Well, guess what? The U.S. is not great. Europe is not horrible. It's more in the middle. The U.S. dollar is expensive. The euro is cheap. We have said before the euro is going to be the rock star this year. And indeed, they talked about negative interest rates and whatnot. Well, guess what? Negative interest rates are off the table. These additional programs are off the table. It was very boring when the ECB came out yesterday. Boring is good. Quiet is good, and that's why the euro has been surging. We expect that to continue, the euro to be substantially higher at the end of the year.
Finally, let's bring it all back to gold. Where does gold finish at the end of the summer? It's down below 1,400 now. Does it go substantially below 1,400, or are we going to get more of a bounce, maybe to get to 1,500 by the end of the summer?
I think we've been forming a very, very good base. I don't know how much longer that base building continues, but 1,400 to 1,500 is, in our view, much more likely than 1,300 to 1,400.
Thanks a lot, Axel.
My pleasure.